I will find you. And I will kill you.
Good luck.
This is easy news. Recently, we've been hearing a lot about GameStop and was wondering what this was all about. I'm here to explain. It all began when Ryan Cohen became a new board member of the company GameStop. This was a big deal for the GameStop because Ryan was co-founder of the successful business named Chewy and was also a well-known activist investor. Now that he was with GameStop, Ryan Cohen had many big plans for it. He was going to update their revenue stream and make the total shift, bringing their operation from offline to online. People in the Wallstreetbets, they saw this and they really liked this idea and was ready to hop on board. They were like, Mister, we really like your idea. We're going to buy GameStop shares and let's give this a whirl. Let's give it a go. So, from January 11 to January 13, in just 2 days, the stock soared for 57%, reaching $31.40 per stock. But apparently Ryan didn't convince everyone because people at the Citron Research, and especially their partner, Andrew Left, they were laughing at this whole idea and thought this was just silly. Andrew Left even posted on the Twitter on why GameStop will fall back down to $20. And people who buy into this are complete idiots. Citron Research did have their reason to say such a thing because the company GameStop wasn't doing too great. GameStop recently closed 800 of their locations in the last 2 years, and during their last annual report, they said they will close additional 1,000 stores. All be closed by coming March. A lot of the other hedge funds agreed to the idea because for them, there was no fundamental to back up the rising stock price. So they chose to short the stock. However, one slight caveat was that those companies, they have shorted 140% of total volume of the GameStop that was being traded in the market. Obviously, this whole thing really upset the people in the Wallstreetbets, and they said this was enough. And they were going on a war against hedge fund and the Wall Street. They will buy up the stock, and with the price increase, hedge fund, those on the short position, they will incur a loss, which put them on the short squeeze as they will try to cover up the losses. On top of that, the people in Reddit will buy up the call option, and by doing so, those hedge funds will be forced to gamma squeeze, bringing up the stock price even further. The wrath of people was fierce, and power really showed. The price soared over 135% over a day, going from $31 to whopping $347. The loss for the hedge fund that shorted the stock were mounting really fast. However, Citron Research and his partner Andrew Left, that were keeping their calm, and they were saying this whole movement, as they wasn't based on fundamental, they were just gonna fizzle out pretty soon. and there was nothing to worry about. For a lot of the hedge fund that shorted, their money was already stuck with this whole transaction, and if they take it out or close their position, they will incur such heavy losses they couldn't back out now. This would end up their career. There's no way they will keep their job after losing billions of dollars. Nobody wants to go to their clients and say, "Whoops, sorry, I lost all your money and our company is broke." They will get class action lawsuit from their clients, and nobody wants that. Unfortunately for those Andrew left and hedge funds, things weren't looking great for them because now big guns were showing up. Social Capital CEO Chamath Palihapitiya, he showed up with his support by letting people know that he was buying call option with activating price of $115. Also, Elon Musk, the adamant hater of the short selling or short seller, posted a tweet about this whole event that and supporting the effort of people in the Wallstreetbets, writing "Game Stonk." With this support, the stock price rocketed over to $500. In the meantime, over at the Wallstreetbets, the morale was just going through the roof. There was many passionate speech on how Wall Street ruined their life and their youth. And there was one which I find it done pretty good job summarizing the general emotion that ran throughout the Wallstreetbets page. So I brought it here. It was specifically directed to Melvin Capital, one of the hedge funds that shorted the GameStop early on with the Citron's research. And it went kind of like this. Melvin Capital symbolized everything that I abhor. Wall Street manipulates market to earn the money, robs the company with their short selling, and they went on unpunished after breaking many laws. When things got bad, they just asked for the bailout from the bank. That just made up the Melvin Capital which stands today. Often the drive that pushes up the stock price is greed. However, many analysts recognize there is an anger acting as a main driver here. Those new generation that had to suffer the financial crisis during their youth, many analysts point out it is their anger and resentment towards current Wall Street that was being built up, which caused this massive group action. As such drive is never seen before, a lot of the analysts are stumped to make any proper prediction. On January 27th, David finally beat the Goliath. There was no clear sign of price decline, and the momentum, they were holding strong and steady. This meant, unfortunately for Melvin Capital and many other companies that shorted the stock early on with the Citron's research, this was end of the line for them. And they were forced to close their position with the loss in billion. According to the financial analyst of third party, due to this event, they lost 1/3 of its total asset. Just to emphasize how extreme this situation was, up until early January, Melvin Capital was operating $12.5 billion and was one of the biggest winners in the Wall Street. However, since with the loss from the GameStop, they had to resort to asking Citadel and Point72 for financial support of $2.7 billion. Furthermore, that Citron research that laughed at people buying up GameStop and calling them idiot for doing such a thing, they posted on Twitter they would discontinue short selling research altogether and stop publishing short report. From now on, they said they will focus on giving long side multi-bagger opportunity for individual investor. That was it. If whole thing ended here, however, might have sounded a little like happy ending in any Disney fairy tales, but it was far from over just yet, as new challengers were lining up. And we'll continue with this story over at the part 2 of this video. Meanwhile, you can check down in the description and find explanation for the terms that you may not be so familiar with. Don't forget to like and subscribe, and see you in the next video. Bye.